Chapter 2: Why Real Estate is a Great Tool for Building Generational Wealth. Dear children, as you get older, you will soon realize that there are many ways that you can make money in this world. By the time you read this, the world might have drastically changed, and some of the things that I am about to tell you might not be relevant. The information I am about to give you, on the other hand, has been relevant for centuries and has made a lot of people millionaires. The three main reasons why there aren't a lot of millionaires in this world today is due to the lack of education, opportunity, and income. These three factors have made it extremely hard for people to execute the steps needed to become wealthy. The good thing is that the world is changing, and in a positive way. The average Joe can now become wealthy, even without much of an education or a large amount of income. This chapter will be discussing why real estate is an excellent investment and a great tool for building generational wealth. When it comes to real estate, there are a lot of ways you can invest. For example, you can buy houses to fix up, then sell them at a profit. Some people will buy the stocks of companies that buy and own real estate, called REITs, Real Estate Investment Trusts. Other people buy houses and rent them out. You can also get into purchasing commercial real estate and apartment buildings. The point is that there are many ways you can get into real estate investing. In my opinion, I think the best approach is to buy rental properties. I truly believe that this is the best way to build and keep generational wealth. Keep in mind that this is the year 2020, and by the time you read this book, many things could have changed. For example, today it was announced that anyone who doesn't produce a down payment of 20% or higher on an investment property would face tight restrictions. They also made it harder to qualify for a traditional mortgage by ensuring your credit score has to be at least 680. In the previous year, the minimum credit score you needed to have to qualify for a loan was 600. They are also adjusting the debt-to-income ratio qualifications. Debt-to-income ratios will be explained in the next chapter. The worst investment they made, which will impact many investors, is that you can only refinance your multifamily property when you need to use the money to make improvements on that specific property. This new rule applies unless you make a down payment of over 20%. These adjustments came about due to the coronavirus, which has put the whole world on lockdown. Again, by the time you read this, many other things might have changed, but using real estate as your generational wealth builder will still remain valid. That is why it's essential to make sure you are always researching and networking. The economy is ever-changing, and new opportunities and tools are always popping up. So make sure you take advantage of them. Keep in mind that each country, state, and province have their own rules and regulations. That is why it's important to do your research. The first reason I think buying a rental property is a great way to build generational wealth is simple. What other type of investment can you put down 20% or less of an asset's total value, then get someone else to pay off the balance? What I mean by this is, you are only putting down a small fraction of the total cost of something from your own pocket. You are then borrowing the rest to come up with the total amount you need to buy the asset. The beauty part is that the renter will be the one paying back the total amount that you borrowed, and not you. While the amount is getting paid down by the renter, you actually have ownership rights to that property. You can even get your initial investment out by refinancing the property and repeating the cycle. The fact that you can put down 20% or less and the renters end up paying off the remaining 80% over time is outright fantastic. Another amazing thing is that you have ownership rights to the property during this whole time, which you can use as financial leverage elsewhere if you wish to. You can also get your initial investment out by adding value to the house. You can do this, for example, by adding extra bedrooms or doing anything to the property that will increase its value on the market. This is called forced appreciation. When you combine forced appreciation with the fact that property values naturally go up over time, and you add how much money the renters have paid down on your loan so far, this will be the money you can get out in cash, referred to as equity, when you refinance your mortgage. When you refinance your mortgage, you are basically taking out a new loan to pay your old loan off, and you pocket the difference. Refinancing can free up your initial investment, which you can now use to buy more property, start a business, invest, etc. When purchasing rental properties, make sure that they also give you what is called a positive cash flow. I will talk more in depth about this in a future chapter. You are getting someone else to pay down the loan for you each month with the rent they pay you. It's almost like they pay you each month for that opportunity to make you and your family wealthy. Renters trade their time for money at work each week so they can give you a portion, which in turn allows you to have more free time on your hands. This arrangement builds your empire and grows your wealth. Renters become your employee, but you don't pay them. Instead, they pay you in cash each month for the opportunity to work for your empire. Ensure that you save that positive cash flow every month because it will help you maintain your property and help you buy more real estate. It's also essential to keep that cash flow because it will give you peace of mind. You will know that you are covered and will not have to spend out of pocket to pay for unseen expenses if anything happens. The second reason I think buying a rental property is a great way to build generational wealth is that property throughout human history tends to increase in value over time. The house you buy today will be worth more money in the future. It makes sense because the amount of habitable land in the area you want to buy in will always be limited. Therefore, as more houses get built, less land becomes available for future real estate development. This is true all over the world because the earth only has so much land on it. The supply eventually will hit its capacity and in turn, drive up the demand. The longer you own the property, the more money it will be worth, which is good for accumulating generational wealth. The critical thing to remember is that, like stocks, the price of real estate fluctuates due to a lot of factors like supply and demand, the state of the economy, things being built close by, etc. Although the housing market does fluctuate, it does so in an upward trend over time. This type of increase over time is called appreciation. The third reason I believe buying rental properties is a great way to build generational wealth is because of the tax benefits ownership gives you. The easiest way for me to explain how taxes work is to give you an example. If I were to make $50,000 in a year at a regular job, and someone else were to make the same amount with their rental properties, guess who gets to pay fewer taxes on that $50,000? The person who made $50,000 using their rental properties would get to keep more of their money due to the fact that their income was generated through rental income. The current laws state that you can deduct things like property depreciation, property taxes, mortgage interest, and other things related to real estate. In turn, this will allow you to pay less in taxes and keep more of your money. I don't want to get into too many details about taxes and how they work with regards to rental properties, because by the time you read this, as I said before, they might have different tax laws than they do today. Make sure to talk to an accountant about this and also do your own research. The fourth reason buying a rental property is a great way to build generational wealth is that if you purchase real estate at a lower price than what the market is currently asking for, you will already have equity built into the property. Equity is how much the house can be sold in today's market versus how much you currently owe on that property. Equity factors in how much of the principal you paid down on your loan so far. For example, if you purchased a rental property for $100,000 and that same exact type of property sells for $110,000 in the same area, you can get your house appraised and possibly have $10,000 in equity. This is all possible because a house just like yours in the same area sold for much more than what you paid for it. Then, let's say your renters have been paying down your mortgage for the past 5 years, and now you owe $30,000 less on your mortgage. When you add the $10,000 and $30,000 together, it will give you $40,000 in total equity. The great thing about having equity in a property is you can use it as leverage to borrow money to help you get more properties, start a business, send your kids to school, etc. To recap everything so far, you will be receiving money from your renters, which reduces the amount you owe on the property each month. You also made sure you bought the rental property at a discount. These two things help increase the equity in your property, not including the fact that your property will increase in value over time. As I mentioned before, you can also increase the equity on your property by using forced appreciation. Forced appreciation is accomplished by renovating your property. So when an appraiser, the person who determines the wealth of your property, comes and sees all the improvements you have done, he or she will increase your property's value. The major thing to keep in mind about forced appreciation is that you have to make major changes. Adding an additional room, finishing the basement, adding a garage, or installing a deck is likely to get your property value to increase a significant amount. Another thing you also want to think about when doing these renovations is that when your property value goes up, so do your property taxes. There are other reasons why rental properties are a great way to build generational wealth, but the four listed above are the main reasons. The reasons include the fact that if something terrible happens to the house, you still own the land. It's an investment that you can feel, smell, and control. I'm sure by now, some people reading this will argue that investing in stocks might be a better way of building generational wealth, or maybe even starting a business. To them, I say, how many times have people lost all their life savings in the stock market or investing in companies compared to real estate? Currently, a large number of businesses have shut down entirely during this coronavirus pandemic. And not just your regular mom-and-pop businesses. I am talking about large corporations. Oil future stocks went below zero, and a lot of people lost a ton of money there. The one thing that remains true is that all those employees, CEOs, and stockbrokers all need a place to live. That's why real estate has made a lot of people millions and billions of dollars throughout human history. Remember, even though real estate prices might fluctuate, it's always doing so in an upward direction over time.